Now everything should be up and running. So thank you very much once again for your support. I guess this is the last one of the year, and what a year it has been. Please kindly let me know, guys, if you actually if you actually can hear me well, can see me well. Just let me know. Hopefully now everything should be up and running. Now, it was indeed a very crazy 2023, and I was thinking about going through it and to basically analyze what people were expecting, where we ended up on, what basically this channel has predicted, what has happened, what has not happened, and then leave a little bit of taste for 2024. So 2023, if you recall the beginning of the year, it was all about the Fed pivot, when was going to, the upcoming recession, the recession was coming, a big recession was coming, financial crisis was coming, all these sorts of things. The next Great Depression was coming. So by when will the Fed need to cut rates? Right. So that was the key of the whole discussion in the beginning of the year. And then, of course, you had the regional banks going bankrupt in March, which didn't help the bullish case. And basically, we did actually have in January a big pump in stocks and in the crypto markets as well. However, by March, as I mentioned, banks started to go bankrupt. So basically, everybody was once again back to the same old story of Great Depression coming. Everything will go to zero. Blah blah blah. All of this. All the economists agreed that the Fed was going to cut rates in Q3 2023. Sorry. And that by September, maybe November, the recession would be apparent to everyone else. But then reality came. Stocks kept moving higher. We actually been in a sideways pattern for a long time, which of course we have broken out of it. Every time we touched the upper scale, something seemed to happen and we would go immediately down. And then once again, the predictions of the end of the world was starting to come. And then, of course, with conflicts in Europe, but also in the Middle East starting, everything was going to go to zero, blah, blah, blah. The same old story as you usually would expect. People were advising to buy bonds. Bonds pretty much finished the year flat, which means adjusted for inflation, you actually lost some money. But basically what happened was everyone was, in a sense, wrong, which makes perfect sense. If the consensus is so, so overwhelming into one direction, the markets are poised to do the opposite of what you expect. And that's exactly what happened. Now, I created my channel in June 2023, so in the middle of the year. And one of my first videos was actually about people should be careful with all these crazy YouTubers predicting the end of the world. Not only the YouTube finance guys like Meet Kevin, Steven Van Meter, Johnny Bravo, but also the so-called finance experts like Peter Schiff and Harry Dent. As you may be guessing, Harry Dent is already predicting the end of the world in 2024. So he's already moving the goalposts once again. If you guys follow this channel, if you guys actually listen to him and to my assessment of him, this should come to no one's surprise. Now, the reason why we wouldn't have a recession this year, and I was very convinced from the start, was basically because everyone was expecting one. And when everyone is expecting something, they take certain behaviors that they wouldn't in times of prosperity, which actually lead to cause the recession. You see, 2021 was a year of euphoria. Everything was bullish. Everything that could go well went well. Everything was going up, blah, blah, blah. That is what sets up 2022's 38% drop in the Nasdaq, 25% drop in the S&P, etc., which is everybody is expecting this crazy bullishness to continue, and then they end up facing basically disaster. So because 2022 was bad, everyone was expecting 2023 to be bad as well. Now, if you pay any attention, you would notice that these things don't happen overnight. Meaning, yes, can we take higher rates for longer in the big scheme of things? So let's say in 10 years, can we take for 10 years high interest rates with the levels of debt we have? No. But these things don't happen in the sense of, okay, the Fed is raising rates now, and in 6 months the whole thing has collapsed. That's not how it works. It will take take some years, at least a couple of years, to start to filter out through the system, and by the time that it becomes apparent that anything is wrong, they will reverse course and they will go 10 times harsher in the opposite direction, which means the rate cuts. Now, what else happened? Gold is well above 2070. Oh, sorry, it closed the year above 2060. And this is where I want to warn you against gold bugs like Peter Schiff. So Peter Schiff is completely addicted to gold, okay? And by being addicted to gold, he is crazy about inflation. So he always talks about things nominal versus real. So nominal means, let's say something went up 10%, but inflation also went up 10%. So basically, in real terms, you end up in the same place that you were before. In real terms means, okay, inflation is 5 and you went up 10, so you actually have a 5% gain. So it does this, and it's true for everything except one thing, the price of gold. And the reason for it is very simple. You need gold at 2,500, 2,600 just to hit a new all-time high, adjusted for inflation, versus 2011 using government CPI data, which means you actually need maybe 3,000 something for the real inflation. But he cannot tell you that, because if he tells you, oh yeah, by the way, you can wait 11 years and you steal about 50% from a new real all-time high, he will have a lot of trouble selling his gold. So he cannot do it. It's even worse than that. If you look at the top that was made in the 1980s, you need gold to go to 3,300 just to break even in real terms, adjusted for inflation, versus that all-time high. So it's a terrible investment. That's why I don't spend time talking about it, because even though gold is at close to all-time highs, the freaking gold miners are barely up, and gold miners are down something like 85% versus 2012 all-time high, which means that you need something like a 10x or a 20x just to break even. I mean, in my opinion, there are better things out there to be concerned than this. Also, thank you, Dennis, for the comment. First of all, this year ambition, happy and bullish 2024. Now, thank you very much, Dennis. Highly appreciate it, and I wish you the exact same thing back. I will talk a little bit later about 2024. Now, one of the predictions that I made in the channel that actually raised some of the highest eyebrows, I'd say, was when I said no, oil should peak and that peak should last for several months, should be late September, early October. And you need to understand that when I made that prediction, the Middle East conflict still did not even begin. So it was even before that. So oil was pumping quite aggressively, I might say. And I just said, look, man, based on my charts, I don't think we're going to go above 100. And that is pointing me somewhere to late September, beginning of October. 28 September, WTI crude oil hits $95. And it has been down ever since. Now, once again, people like Peter Schiff were telling you about the upcoming $150 oil. Of course, that never happened. And we are actually slightly above $70 right now. So you actually had an entire bear market from that call that I made. And the reason for it is, look, economists are now saying that a recession is almost impossible in 2024 and that the worst is over. The Fed is saying they see no recession coming. Goldman Sachs, Morgan Stanley, JP Morgan, they all don't see any recession coming, which means the likelihood of a recession has now increased dramatically. That's how it works. And if I can notice that, people smarter than me, with many more resources than me, can and will position themselves for that. One thing that we know is in recessions, demand is destroyed, so commodities go down. So despite the theoretical lack of oil, number one, as Europe is turning increasingly anti-oil, as the US, as certain parts anti-oil, and basically with the escalation of the conflict in the Middle East, and the fact that Russia is the third largest producer that has been taken out of the global energy market, all of this should tell you higher oil prices. But smarter people than me, once again, are seeing the same thing that I do, which is potential recession. So that is putting a lid on the price of oil. Of course, nobody will tell you that because they themselves don't see anything wrong. You see, when I say recession in 2024, I'm not talking about a global depression, 20% unemployment. That's not what I'm talking about. You just need enough slowdown to cause, if you will, a technical recession that will make the Fed accelerate the money printing in order to try to help Mr. Biden get reelected. That's it. And the thing that I find it funny is when people say, oh yeah, the dollar will collapse, blah, blah, blah. I say, why? Depending on what you're talking about. Are you talking about the dollar versus real stuff versus other currencies? Typically, people who believe this have this vision where the dollar will collapse and somehow the rest of the world will just be fine and we just move like nothing is happening. Now, the funny part about this is Japan remains at an extreme ultra low interest rate policy. China is back to money printing and cutting rates. Europe never managed to get the rates as high as the US, and it won't, and they will be back to money printing again. The UK is about the same length as the US. My point being, oh, and by the way, the Europe was basically hiking rates, but buying Southern European bonds on the backside, meaning printing money on the other side as well. So my point is, why is the US this island that will collapse brutally, while all the other currencies that are basically doing the same thing, meaning the currencies of countries that are doing the same thing, why will them just rise to the occasion? I mean, that is the part that nobody actually explains. Like people who actually position themselves, with this idea that the US is just going to collapse and it's going to be the end of it. I mean, I really don't get it. Hey, be nice. Thank you very much for that, for the nice comment. I really appreciate it. I mean, it's just that they say these things because it's popular to be against the Fed. It sells well, it's good for YouTube. And look, I don't like what they do either. But the point is, I'm not going to come here and make a Peter Pan story that will basically convince me that the Fed is about, to collapse the entire markets, where I really don't think that's going to happen. Now, another prediction that I made here at the time, this is very important because I was making a prediction completely the opposite of what all these channels, all these economists, all these finance gurus were saying. I said new all-time highs, Dow Jones, S&P, Nasdaq 100 by at latest Q1 2024. Dow Jones, check. Nasdaq 100, check. S&P 500, we are less than 0.5% away. Now, contrast this to the people that told you that the markets are going to collapse, a Great Depression, go down 60%, blah, blah, all of this stuff. You see, the reason why they don't understand is basically they are convinced that stocks can only go up if interest rates are low and there's ultra liquidity in the system. Why? Because this is what they've seen in 2008. From 2008 until 2021, that's all they've seen. So they've never spent any time looking at the past. So basically, they get super surprised. How is this possible? Now, they even forget that the stock market bubble from 1921 to 1929, which culminated with the Great Depression, interest rates were really high. And we still had, if you adjust for inflation, actually the worst, it was a worse bubble than what we have today. If you look at the tech bubble, which was worse than the one that we have today, interest rates were also higher. So it's clear that you can have very good performing markets with higher interest rates. Why? Because we've seen them before. So what the market does is it takes into account a new cost, which is the cost of financing. They will try to tilt into better companies because they're more likely to pass that cost to the consumer than a high growth, high flying, loss making company. And what you see is a reallocation of some portions of portfolios into certain sectors. That's it. But that doesn't mean that the whole thing's going to crash 60%. Now, why did we have a massive correction from 2021 to 2022? Very simple. 2021, market was priced for perfection. You introduce something which is not perfect. The market adjusts. That's it. When the market gathers more information about the real implications of each of the new things which are perceived to be negative, then we can move up again. That's it. That's really it. So there's a big fight right now, if you will, which is the long-term influence or the medium-term influence of higher interest rates versus the potential of artificial intelligence. That's the key fight happening right now. Now, the best example that I've seen about artificial intelligence, and I'm not going to pretend to know the ramifications of artificial intelligence into all the industries, that is extremely arrogant to do, is the utmost leapfrog that human mankind ever recorded was when we advanced 50 years in one single year. That was our record as mankind. Artificial intelligence is estimated at this stage, with still limited information, that we're going to leapfrog 1,000 years in 10 years. That's an average of 100 years per year, which is double humankind's record. What does that mean? I mean, you take your guess, I can take my guess. But the point being, it will really completely change the world as we live in. And you already see certain companies which are on the forefront, like Microsoft and Nvidia, already delivering huge improvements across the board. So it's anybody's guess how exactly things will turn out in the future. So to conclude on the markets, S&P 500 end up the year around 25% up, Nasdaq 100 end up 50% plus, 55% plus. I think it was the best year for the Nasdaq 100 with the exception of 1999. So that should tell you everything you need to know. Now, there is a common thinking of people in Wall Street, which is, interest rates damage tech stocks more than others. False. Because tech stocks are some of the most powerful at the moment that can withstand pretty much anything. Higher interest rates damage small companies, medium companies, which are zombie companies. These are companies that only exist because interest rates have been low for many, many years. They shouldn't exist in normal conditions. So, guess what? The Russell 2000 is the one that gets hit the hardest. However, when there's perception of rate cuts, it is also the one that benefits the most. So a couple of months ago, I predicted that the small caps, the Russell 2000, is going to start outperforming the other major indices. So far, that has happened as well. Once again, is that a major, oh my God, what a Nostradamus? No, it's just look at a few key things, key big things, and don't waste time trying to analyze every little thing because you're going to go crazy. Just look at the major trends and things will do fine. Like, if bonds are collapsing, there's no way the stock market is going to have a consistent rally. It's not a possibility. Why? Because the stock market is a derivative of the bond market. That's it. So there's not going to be any way where the bond market is just going to collapse completely and the stock market is just flying high. There's no way. And the reason is just that. Okay? Now, crypto markets. Oh, sorry. Let me just go through the meme stocks before I move to crypto market. So meme stocks, I made a few predictions about companies like AMC, like MBOT, like Mullen, like GameStop, etc. Pretty much all of them happened. Those videos, by the way, believe it or not, were the ones where I got the hardest pushbacks. Like, you really had some people from the apes, really pushing back against me. But unfortunately, everything that I said happened. Now, I'm not here to say, ha, you see a bunch of it. No, I am here to say that hopefully you can look back to some of those videos and understand how you are manipulated by these YouTube finance people, how they position for basically benefiting from your emotional attachment to stocks is all a game to them. See, they don't give two F's about you. You are just their source of passive income. You'll always be that. And they know very well how to manipulate you to keep you interested in these garbage stocks. And they will never talk to you about the fundamentals of the company because it will become apparent to you what a stupid stock it is to go all in. I mean, sure, you want to gamble, you want to see what happens, maybe the whole thing goes up 10x, who knows? That's perfectly fine. But to put your life savings on it, I mean, once again, it's designed to trick you. That's all it is. Now, crypto market. That was actually my best predictions of the year. One of the reasons I created the channel to begin with. And I do think, I think Bitcoin was about 17, 18 or 19,000 when I started to go actually in a bit more detail with it. But in any case, so crypto is really what I see, in my opinion, for me. This is not for you to copy me or to do any of that. It's just what I believe. I think crypto is the best place for average people to create generational wealth. Now, it's also extremely high risk. So let's go back to see what happened. 2022, bear market, 4-year cycle, everybody knows, crypto is finished, FTX went bankrupt, this is the end, regulators, blah, 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 the whole thing. A documentary is coming out, how crypto was a scam, the whole things that we like to see. So that's when I basically accumulated crypto as much as I could. Then 2023 is the recovery year. Now, the recovery year, for people who don't know, but I will go through it again, is you have these big gap ups, usually within 1 to 2 weeks, and then it's like watching paint dry. You just go sideways forever, and then you have some push up again, a bit of correction, sideways again for months. It's extremely boring. And it's just like 2019 and 2015. I really don't understand how people can get so surprised, because the only thing you need to do is actually look at the Bitcoin chart and take out the dates, take out the price. You put 2015, 2019, 2023, and the freaking charts look identical. And the narratives are always the same, you see. But this is where people get it wrong, which is, okay, but you're telling me that this is so visible. Why are people still selling? You remember when you were at school and you open up your history book and you read about the Civil War in the US, for example, and you read something like 100,000 people died here, blah, blah, blah. One thing is to read it, The other thing is to actually be there and see it and live it. It's very different. So when you're looking at the charts of something that happened in the past, it's very easy. Oh yeah, okay, so we go 10 weeks without moving, blah, blah, blah. So when you're looking behind is one thing, but when you live it, it's much, much harder. So that's why I had a target, which is 2025. That's all I care about. 2023 to me was still accumulation year, but as we're starting to move up, I'm buying less often, but bigger clips instead of buying on a weekly basis like I was doing on the previous month. What happened also? Bitcoin up 140, almost 150% on the year. Granted that we're still trading until tomorrow. We crossed the 44,000. We are still not up above 45. 45 will be the key, because that's going to be the price that we should get to above 45k before the end of January to put us in line with previous cycles. As I've mentioned, Bitcoin tends to outperform Q3, Q4, but particularly Q4 of the recovery year, which again it did. Ethereum tends to outperform in January, early February, and then you have the altcoin season afterwards into the Bitcoin halving. Does that mean that's going to repeat again exactly? No, that doesn't mean. Will we get the ETFs approved? I'm pretty sure yes. Will the ETF help as a pumper? No doubt. Will it be a buy the rumor, sell the news event? Also no doubt. In my mind, at least. Will the Bitcoin halving help pump crypto? Yes. Will the Bitcoin halving be a buy the rumor, sell the news event? Also yes, in my opinion. We'll see if I'm right. We need to wait for late March on that one, and we will see if I'm right or not. Finally, 2024. What do I expect? I expect the year to be quite volatile. It's an election year. I do think we're going to see some good signs of recession in the beginning of the year, which in my opinion will probably prompt the Fed to cut rates even a bit sooner than expected. Those rate cuts will not cause a spike in inflation, unlike what most people expect. Printing money in the form of that we've been doing from 2009 to 2020 does not create inflation. The type of money printing that we've done in 2021 creates inflation. When you give money straight to people's hands, that is different. When I'm talking about inflation here, I'm talking about when you go to the supermarket, to the gas pump, not about asset price inflation, because obviously that is what ends up happening. But that is the type of inflation that all of us like. I do expect a volatile year. I do expect stocks to end up higher. I do expect to see the S&P 500 beat, of course, its new all-time highs. I will make some more concrete predictions as we move forward. As you know, I don't like to throw numbers too far off because you tend to fall flat on your face. There are a few things that I need to see. I've made a bit more concrete predictions on the crypto side because that one I feel more comfortable. On the stock side, I do believe we're going to end up on higher biases, meaning I do believe 2024 will be a green year. Will it be a green every month? No. Will the beginning of the year be volatile? I think so, but particularly quarter two, I think will be volatile. And then I think we're going to end up the year strong again. Finally, guys, what I wanted to say is thank you very much for following the channel. I created the channel almost 6 months ago, 831 subs. So I could never actually imagine that I would grow that fast. So I'd like to thank you all for your support and for being so nice to me. I think the community that we're building here is great. I think 2024 will be a very interesting year on the crypto side in particular. So you guys can rest assured that I will always be here and hopefully help you not to fall for some of these disgusting grifts that unfortunately we see on YouTube. And with that, I wish you all guys a happy new year. Don't drink that too much. I mean, I'm not a good example, so I cannot really tell you to tell you to do that. But I really wish you guys all the best, and that you have some very nice plans. And we'll see you in 2024. Thank you very much, guys, and I'll catch you in the next one.